Trading in commodities are subject to market risks. Please read disclaimer available on the screen carefully. Good morning everyone. Let's have a quick roundup on commodities. Starting with the soybean. Soybean on CBOT is now trading at a 6-month high and prices have popped up more than 19% since November 30 last year. Well, supply concern in South America, especially in Brazil and Argentina, has supported the prices. Earlier drought has trimmed the output forecast. Recent excessive rain was reported in some states of the Argentina and Brazil that has also damaged the crop and increased the moisture, which is actually now worrisome situation. That is why we are seeing such kind of a galloping move happening in the US bourses. USD export sales number revealed that last week US export has increased by 28% YOY, and we expect now soybean prices to remain firm unless it is not closing below 1350 on CBOT. And in domestic market, prices are continuing to hover around 6400. We believe sideways trend to continue, but with a positive bias, and there is likelihood of soybean in the domestic market to reach 6800 to 7000. Talking of soybean oil, it has jumped more than 25% since last December 15 in the CBOT, and it is likely to stay firm. Domestic prices of soybean oil is also showing kind of a heat, and we have seen 7% gain this month so far. In the domestic bourses, soybean oil prices are likely to remain firm unless it is not closing below 1252, and there is high possibility of medium term trend to remain bullish in this counter in the domestic market as well. Now talking of crude palm oil, it has made new record high in the Malaysian market. Supply is expected to be lower from the Malaysia due to the drought and labor concern there, that has supported the prices in most of December and January. But recently Indonesia has also announced that they would limit export of palm oil, which has also actually upped the global supply concern, due to which prices are boiling. CPO in domestic bourses has moved up around 7% this month, and trend is likely to remain strong bullish unless prices are not closing below 1149 on downside. Talking of mustard seed, it has erased part of the last week's gain, as rain last weekend was very favorable for the crop, and now outlook is shifted to the crop, which is likely to be bumper this year. For fortnight time, prices are likely to remain 7200 on downside to 8200 on upside with negative bias. Talking of cotton, it is continue to trade around 10-year high in the CBOT market, and domestic market very near to the record high recently made. Outlook is looking firm because supply is tighter in the domestic market and global balance sheet is also tight. Now shifting focus to the energy complex, oil prices are trading at a 7.5-year high, supported by the rising geopolitical tension, which has added premium to the prices. Since December low, prices have popped up by almost 30%, and undertone is bullish. And US, talking of US inventories, it is sitting at a 3.5-year low, which is also supportive to the prices. OPEC has limited cushion to increase the production. Simultaneously, outages from Libya is also getting oil on the positive direction. Well, we believe as long as prices are trading above $80, trend to remain firm, and we won't surprise if prices of crude oil will cross the 95 odd marks in the coming days. Talking of precious metal, gold continues to decline on surging dollar index, which is trading at a 1.5-year high, and simultaneously uncomfortable movement in the US 10-year bond yield, which has popped up 1.90 this week and currently hovering around 1.85. Well, a recent statement of US Fed was very hawkish, due to which we have seen such kind of move happening in the US dollar index and bond yield, and gold is actually negatively correlated with the bond yield. Any upside move in the bond yield will continue to have a negative impact on the prices of gold. Well, US central bank is likely to increase interest rate in March meeting, and this time pace of rate hike will be steeper the way inflation is inching up. For some time now, gold prices are likely to remain $1,700 to $1,880 price band. Any rise above $18 will not be sustainable. Gradually, it would be heading towards $17 odd marks. Hope you have liked our video. Don't forget to subscribe and like our channel.